Hello everybody, welcome to Stock Power. My name is Srinath. Today we will discuss about the basics of stock market, and this is a master course series for beginners, and this is the first part. I am Srinath Achar, a full-time trader, motivational speaker and business coach with over 20 plus years of trading experience in international exchanges and Indian exchanges. Strategic analyst, co-founder at Stockpar, Bangalore. So the outline of today's discussion would be what is the stock market, what are financial markets, and what is Indian stock market, and we are going to talk a little bit of technical analysis, fundamental analysis, and how we can trade in these markets. Financial markets in India is a broad term describing any marketplace where trading of equities, bonds, securities, currencies and derivatives happen. So a marketplace where shares of public listed companies are traded. The primary market is where companies float shares to the general public in an initial public offering to raise capital. You would have heard a lot of companies going public, and this is called initial public offering. It facilitates stockbrokers to trade company stocks and other securities. A stock may be bought or sold only if it is listed on an exchange. The meeting place of the stock buyers and sellers, this is called the stock market. India's premier stock exchanges are the BSE and the NSE. In today's discussion, we are going to talk about what is a market, technical analysis, which comprises of RSI, moving averages, Fibonacci, VWAP, candlestick patterns, stochastics, volume analysis, and different types of markets. We will cover these basics in the coming videos, and it will be very informative, traders. So kindly pay attention, learn as much as possible, and this stock markets are very lucrative if you have an edge in the stock market. So we will also touch base fundamental analysis, price action, support and resistance, breakout, breakdown, indicators, oscillators, different types of trading, swing, intraday and positional trading. And we will also see what are futures and options, how to trade in options, what are option Greeks, option chain analysis, option strategies, trading psychology, risk management, loss recovery, intraday zero hero strategies, stock selection and positioning. What are stocks and stock markets? A stock is a share in the ownership of a company. Stock represents a claim on the company's assets and earnings. As an owner, shareholder, you are entitled to share of the company's earnings as well as any voting rights attached to the stock. Why do companies issue stock? At some point, every company needs to raise money. It can be for diversification, it can be for expansion, it can be for a profit motive. So companies do raise capital from these markets. Companies can either borrow it from a bank or an individual investor, angel investors, or raise it by selling part of the company. By issuing stock, the company does not have to pay back the money or make interest payments. A stock market or equity market is for the trading of company stocks and derivatives at an agreed price. Who is a shareholder and what does he get out of the deal? Traders, generally a shareholder or a stockholder is an individual or a company, including corporation, that legally owns one or more shares of a company. The shareholder gets the hope that the shares will be worth more in the future. If the company does well, the stock will probably increase in value. If the company does not do well, the shareholder may lose his or her invested money. Shareholders are granted privileges depending on the class of stock, including the right to vote, on matters such as election of directors to the board, the right to share in the distribution of the company, and right to company's assets during liquidation. Shareholders vary from individual investors like you and me to large investors. Different types of markets. Traders, generally we have equity markets. Equity is nothing but buying a company's share, as we discussed. And we have Forex or currency markets, wherein you can trade in currencies like USD, JPY, INR, Euro, GBP. All these currencies can be traded. We have commodities markets, which are with ferrous and non-ferrous, agro products, and precious metals. Derivative markets are futures, forwards, and options. Crypto markets, which is in the news these days, we can even trade in bitcoins. Traders focus, learn the right way to intraday trade. See, day trading is an activity wherein the trader has limited time frame, starts in the morning at 9:15 a.m. and ends his trade by 3:15 p.m. So every trader has a reason to trade with their trading experience. Day trading, generally referred as intraday trading, needs experience, knowledge, and edge in the market. Directional or trend analysis contributes to a successful day trader. Positioning quantity for day traders with an accurate risk management is a must to achieve desired risk-reward ratios. Scalping. Day traders generally scalp, wait for the market direction, and with a limited time frame to enter and exit with accurate risk management. Now traders, let us see what are the different exchanges we have in India. I'll quickly run you through this, and if you want to understand well about these markets, there are plenty of videos on YouTube. You can visit them and try to understand in depth how these markets basically work. You need to have a basic understanding of how many markets we have and how do we trade in that. So, Bombay Stock Exchange, established in 1875, it's Asia's first stock exchange, largest stock exchange in India, and Sensex is the index of the BSE. The timing is, it opens 9:15 a.m. and closes at 3:30 p.m. We have National Stock Exchange. It was established in 1992 and this is the second largest stock exchange in India. Nifty is the index of the NSE. Trading takes place on all days of the week except Saturdays and Sundays and on government holidays. Timing remains the same, 9:15 a.m. till 3:30 p.m. So Indian stock markets, basically we have Sensex. Sensex is the benchmark index of Bombay Stock Exchange. Initially compiled in 1986, the Sensex is the oldest stock exchange in India. It is composed of 30 of the largest and most actively traded stocks on the BSE, providing an accurate gauge of India's economy. Analysts and investors use Sensex to observe overall growth. Overall growth, development of particular industries and booms and busts of the Indian economy. Now the most interesting index is the Nifty index, Nifty 50. The Nifty 50 index is National Stock Exchange of India's benchmark broad-based stock market index for the Indian equity market. It represents the weighted average of 50 Indian companies, stocks in 12 sectors, and is one of the two main stock indices used in India. The Nifty 50 index is a free float market capitalization weighted index. Intraday trading versus long-term trading investment traders. Here, as we discussed, we have different types of trading styles. Every trader has their own interest, be it can be intraday, it can be a swing position, or it can be a positional call. So what is intraday and what is long term, what is swing, we will try to understand in the coming slides. Day trading is for short term. One has to buy and sell stock on the same day. Long term investment is always equity positioning. One can buy and keep stocks for as many years you want. If I'm buying per se Reliance, today I can keep it for 1 year, 1 month, 10 years, 100 years. Everything is possible in long term investment until unless the company is listed with the exchanges. The power of compounding will lead to wealth creation in long term investments or positional calls taken by the trader to achieve his goal in the markets. There are many investors who are interested only to accumulate wealth in the stock markets. However, it all depends on your capital holding power and ROI expected. Now traders, let us understand what are the different types of indicators and oscillators under technical analysis. As we discussed earlier, there are plenty of indicators on the charting software. If you are looking at using indicators, basically you may have to look at RSI, MACD, Bollinger Bands, stochastics, volume profiles, candlestick patterns, etc. When we scalp on a day trade, we need all these parameters to identify the direction of the trade with the basics of support and resistance, the demand and supply zone, price action, and market psychology. If there is demand, that means that is a support area. If there is a resistance, that means that is a supply zone. Trading, we need to understand what is the support and resistance with price action. What is support and resistance? Traders, we will discuss this very briefly in the coming slides, and we can take it forward. And this is a very important subject. It requires more time to understand. So right now you need to understand where there is a supply, right? There is resistance. Where there is a demand area, that would be your support area. So now you would have heard about bull and bear. What is a bull market? A bull market refers to a market that is on the rise. There is a sustained increase in market share prices. Investors often have faith that the uptrend will continue over the long term. Typically, in this scenario, the country's economy is strong and employment levels are very high. Now, what is a bear market? It's quite opposite to a bull market. Bear market is a general decline in stock market over a period of time. Share prices are continuously dropping, resulting in a downward trend. Investors anticipate losses and selling increases. Typically, the economy will slow down and you can see unemployment rising sharply. Now traders, what softwares and who are all the brokers which are available in India? See, basically, to me, I use Zerodha charting software, TradingView for my day trading. I also use Ami Broker, Ninja Trader for my other trades. There are two types of brokers. One is a conventional broker or a traditional broker, and the other one is a discount broker. Who are conventional brokers? Conventional brokers are typically who will provide you with a relationship manager, will also take care of your portfolio, manage your portfolio, and provide calls, and they manage your complete portfolio. Like Motilal Oswal, IIFL, Edelweiss, etc. Now let us see who are discount brokers. Discount brokers are online brokerage companies which provide you a platform to trade. Even you can trade from your mobile. You can chart, you can understand the charting patterns, you can buy shares, you can buy options, you can completely do. There won't be any kind of a relationship manager for you. So you will be managing your portfolio completely. Leading discount brokers like Zerodha, Upstock, Alice Blue, Angel One, Samco, Fires, these are the leading discount brokers. Now traders, the most important thing is, why do most traders fail in this stock market? When we have charting, when we understand charting patterns, when we know technical analysis, when we know fundamental analysis, and we have a very fair idea about the stock markets, the way they behave, everything, but still traders fail. The most important thing which I have seen in my life, of which 22 years with this particular markets, is that most traders fail to have a system in place with a proper risk management, with the proper risk management. So, a leading discount company has confirmed that 90% of the traders within the first 90 days will wipe out their entire 90% of their capital. Retail traders are one who generally provide liquidity in the markets. In these markets, the novice trader has to understand the risk reward ratio only with proper risk management and position sizing. Everyone can achieve very good profits or get trapped. There is no holy grail strategy that will make you 100% profitable. It is only your risk reward ratio, your proper risk management, and your proper position sizing. You have to have these three things along with your technical analysis, knowing about the company, their fundamentals, the general trend, global trend. Only then you'll be profitable traders. So now kindly ask yourself, if you are ready to learn, if you can learn, you can understand the markets well, you can earn well. And the opportunity is huge, very huge. Now let us talk about strict capital and risk management, which is very important in day trading. As we discussed risk management and capital management, wealth protection is a must. What is EFGH? The most important thing is, in these stock markets, emotion plays a very big role. Like any other industry, this stock market industry is such. Emotions play a very, very big role. And fear. Fear is such, when you take a position without knowing or without having an edge in these markets, you take a position, the market goes against you. Immediately you can see loss on your particular screen. So what happens? The fear factor is built in you. Does the market come back? Does it wait for you? Or does it still go against you? So this fear factor can be eliminated only with a proper analysis, a system in place with a proper strict stop loss. Only then you can achieve, you can overcome fear, emotion, greed and hope. Ask yourself, what is the trading edge you have in these markets? Trading edge is nothing but the knowledge apart from other traders. Trading is all about how you manage your capital, risk, reward, and plan your entry exit. Now, traders, as we discussed EFGH, let us understand what is market psychology. Trading psychology is all about managing your particular capital and risk with proper understanding of the markets. These markets are supreme, and price plays a very, very, very important role. All your technical aspects will come only after the price has moved. So for you to understand the demand and supply, you need to understand support and resistance. You need to understand what is the risk you can take in these markets and what is the reward you're looking at. So all these things has to be predefined. There has to be a system in place. Once you have a proper system with a proper risk management, everything is possible, traders. Every trader has to have a very good predefined risk management strategy and capital protection management with entry exit SL, that is stop loss and targets. We have to be with the markets, not against the markets. For this we need to know what is our market edge, like support, resistance, demand, supply, price action and market psychology. Risk management and capital protection. Risk management, the first basic thing for any trader is to understand what is a stop loss. Before entering the trade, primarily you need to ask yourself, where is my risk and what would be my stop loss? Risk reward ratio. Every trader need to understand the risk reward ratio and always takes a winning trade with 1:2, 1:3 reward ratios. Never overtrade with your hard-earned money. Always protect your capital for further trades. Invest what you can lose and don't invest what you can't lose. No revenge trades when you lose. Just walk away, close all the trading terminals, as markets will provide you with better opportunity in the future. Don't overtrade, don't enter when you are not in the right mind frame. We discussed this. It is also nothing to do with your emotions. So please traders, I request you, kindly follow these things for you to become a successful trader. Trade, you can learn, earn like a professional, and just don't be a retail novice trader feeding others. So how are professional traders different from a novice trader? See, as a professional trader, as we discussed, you need to have your predefined system or a strategy. Predefined system involves your understanding of the market, your support resistance, your entry exit, your stop loss, risk management. All these things has to be predefined before you could enter a market. And you have to wait for your particular pricing or particular trade to come. Until then, hold your positions, wait for the market to come, reach your position or pricing, and then you can execute the order. I use different time frames to monitor day trading, and I use simple indicators like RSI, VWAP, exponential moving averages, crossovers, that is 20, 50, 100, 200, volume, implied volatility, open interest, option chain. It depends on which particular stock I'm trading, or it depends on the time frame. It also depends on whether I'm trading an index or I'm scalping for some quick points. So it all depends on this. Based on that, my particular system will work, my strategies will work, and I just enter and exit. Patterns and chart reading. As an intraday trader, I use chart patterns and indicators to analyze the direction. Chart patterns are very important. We will talk about this in the coming videos because candlestick patterns are very important. For you to understand, for you to even define support or resistance, you need to have a candlestick pattern. So we will discuss this at length in the coming videos in my series, and you will have a very clear picture and idea about how to read a chart and move on and take it forward. Intraday is time bound, and hence quick trades with entry and exit is very essential with a strict risk management. Traders, again I am repeating myself, you need to have a very strict risk management strategy. You need to have that. This is the reason why most traders, 90% of the traders fail. Without a proper risk management, your entire capital will be wiped out. So please understand what is risk management, where should I keep my stop loss, and what is the risk I can take in these markets. It is very important. So now, the last but not the least, to understand the trend and their reversals, I have strategies with CPR. CPR plays a very major role in understanding these markets. So traders, I hope this video was informative, and this is for beginners, and I hope you enjoyed this video. And if you enjoyed it, please follow us and like and subscribe. Anything which you'd like to discuss with us, you can kindly connect with us on Facebook, Instagram, WhatsApp, Twitter, Telegram. The link is there in the video, in the description. So kindly please subscribe, like and share. I thank every person watching this video and my hearty wishes for your profitable journey. Traders, thank you so much.